Do you want to buy Tesla stock, but you're not sure if this is the ideal time to do so? Tesla's stock price has experienced sharp declines in recent weeks, akin to a roller coaster ride. Don't let that deter you, though. This can be a great chance to purchase Tesla stock and possibly retire with sizable returns down the road. As a result of the company's partnerships and market expansion, some experts believe Tesla's stock price might reach $1,000 by 2030 or even over $830 by 2025. Would you like to know how much Tesla stock you need to retire and live a comfortable life? If so, you've arrived at the ideal location. We'll go into great detail on this subject in this video. Remember to subscribe to our channel and enjoy our videos as we walk you through the computations. In North America, the average monthly cost of living for a family of two is more than $5,000 or $60,000. If, on the other hand, you are retiring alone, your costs will be smaller, about $3,200 a month or $40,000 annually, after accounting for a 3% inflation rate through 2030. If you want to take $5,000 out of your retirement account each month so you may have some fun, you can put that money into an S&P 500 index fund, which yields a 7% average annual return. Consequently, you would have to sell roughly $850,000 worth of Tesla shares and put the proceeds into the S&P 500 in order to get $850,000 by 2030. Several calculators indicate that the funds should last up to 50 years with a 7% return. Using this data, we can determine the best period of time to think about retiring with $850,000 in Tesla stock, a 7% annual return, and a $3,200 monthly spending cap. Now let's calculate the number of Tesla shares required for a comfortable retirement, taking into account the lower-end estimates of $850,000 and a 7% annual return in an S&P 500 index fund. Based on the present pattern of full self-driving (FSD) pricing rises annually, it is anticipated that the cost of FSD for Tesla vehicles will be approximately $28,000 by 2030. This indicates Tesla's belief in FSD's potential for success. FSD has the potential to be a huge source of income for Tesla, much like a cash machine, assuming it performs as expected. The sales of cars and FSD will provide the revenue. Assuming a conservative profit margin of 25% and an average car cost of $50,000 by 2030, the net income from each vehicle sold will be roughly $12,500. There might be 1.5 billion outstanding shares by 2030, although this is unlikely as Tesla might decide to use dividends or buybacks in place of diluting shares. A cautious threshold of 40 is maintained for the price-to-earnings P/E ratio, and the earnings per share EPS is calculated using the outstanding shares prior to the stock split. But by 2030, it's anticipated that Tesla's shares will be valued at more over $50. The investigation solely takes into account the auto sales industry because other industries like Tesla Insurance, robotaxis, and TeslaBot lack sufficient data. Based on the facts at hand, the data supplied is regarded as a minimum estimate and is trustworthy. Let's talk about the minimum number of Tesla shares required for your eventual retirement. By 2030, if Tesla sells 20 million cars, its stock price will be about $450. It's hard to imagine that an automobile business could sell that many cars, even though it's conceivable. With a market worth of about $20 trillion, the stock price would be about $13,000 per share if we assume that they sell 30 million cars, which is a more realistic number than 55 million. Because there are a lot of outstanding shares, the market capitalization is currently relatively high, but I anticipate a decline in the near future. The stock prices ought likely be steady, though. By 2030, you will require $850,000 if you wish to live off of $5,000 a month for the next 50 years. In the worst situation, you will only require 297 shares, or just over $59,400. Investing $59,400 today might yield $850,000 in the next 8 years. After that, you could put it into the S&P 500 and get at least a 7% return. That's it. If you pledge to invest your money sensibly and refrain from wasting it, you will be retired. You would only require 230 shares in the standard scenario, which comes out to about $47,400. If Tesla sells 25 million cars over the next 8 years, this investment might return more than 10 times its value. If they sell 30 million, it could return 66 times its worth. By 2030, $48,000 invested today might generate $850,000. All of this is predicated on the idea that you will reinvest your Tesla gains in an S&P 500 index fund. But if you go with the lump payment strategy and don't reinvest the profits, new research indicates that the typical person needs $1.7 million to live comfortably until retirement. The level of comfort you can achieve upon retiring with $1.7 million is contingent upon your financial objectives, spending patterns, and way of life. Your retirement assets of $1.7 million represent a sizable nest egg that, with careful management, may support a comfortable retirement lifestyle. With no substantial debts and no large expenses, a $1.7 million retirement portfolio can yield $68,000 in income annually at a 4% annual withdrawal rate. Depending on the state of the market and your investing approach, this sum may change. Your needs in terms of money and lifestyle will determine whether or not this is sufficient for a comfortable retirement. $68,000 a year can be very comfortable if you have low living expenditures, don't intend to travel much, have no serious health problems, and have no dependents whom you need to support. However, you could need more money to reach your objectives if you have larger expenses or wish to live a more luxurious retirement. If you have already invested, I would advise against logging in if there is another 50% collapse in the market. The timing of this is uncertain. It might occur within the next year, 2 years, or even 3 years, but given the strength of the American stock market, it is a guarantee. Please be aware that due to a lack of hard data, our study is solely focused on FSD and car sales. It does not include robo-taxes, solar energy storage, or Tesla insurance. Therefore, the only variables that matter to our analysis are Tesla's FSD auto sales, as it helps prevent any future regrets of leaning too heavily on the best case scenario. I'd like to be conservative and lean toward the bear case. Just 300 shares would be required in the bear situation. You'll be good if you hang onto them worry-free for 8 or 10 years. The $800,000 worth of your shares will probably rise during the next 5 years if you decide not to sell by 2030. Since Tesla is a long-lasting company, we anticipate that it will continue to play a big role in the global effort to solve problems for years to come. Therefore, it is quite unlikely that Tesla will collapse or be permitted to fail. Whether Tesla is a fantastic firm to buy, the numbers indicate that this may be a terrific time to buy the shares. Several bull markets have been spurred by Tesla's performance, even though some analysts believe the firm is overvalued. The EV manufacturer has partnered with companies like Lucid, Rivian, and NIO, and expanded into new areas in an effort to increase production and increase its market share. Predictions from pocket investors indicate that by 2025, the stock price might rise above $830. Rivian is a more recent business that focuses in electric trucks and SUVs, whereas Tesla is a well-known manufacturer of electric vehicles. Conversely, NIO is an electric vehicle manufacturer based in Europe that prioritizes environmentally friendly transportation options. Despite their differences, the businesses are all a part of the greater movement towards sustainable transportation and electric cars. According to their resumes, celebrities like Cathie Wood believe that Tesla's stock price will surpass $1,000 by 2030. Given their track records, it's plausible that they have huge ideas for the company. After delivering 108,600 cars in the most recent quarter, Tesla has lately exceeded consensus predictions over the previous 2 years. Tesla is trying to increase the availability and ubiquity of renewable energy, creating effective solar panels, lithium-ion batteries that can be recharged, large-scale energy storage options, and a network of fast-charging stations are a few of these. Additionally, Tesla is making significant investments in R&D to raise the cost and efficiency of renewable energy sources. The corporation is investigating novel approaches to incorporate renewable energy sources into its grid and is also working on developing new battery technology. Tesla wants to minimize the world's dependency on fossil fuels and expedite the shift to sustainable energy. A common desire is to be able to enjoy retirement free from financial concerns. Many retirees still need to create a retirement plan, though, as very few people take the required actions to make that goal a reality. As this isn't always the case, it's critical to prepare for the future by making wise investments. Thus, you may figure out how many Tesla shares you'll need to keep up your quality of living after retirement, depending on your annual expenses. Please let us know what you think by leaving a comment below. Please hit the like and subscribe buttons if you enjoy this video. Until the next video, see ya.